Colleagues and friends, good afternoon and good evening. Let us begin the press conference by the Governor of the Bank of Russia, Elvira Nabiullina, and the Deputy Governor, Alexei Zabotkin. And to start with, let's hear the statement following the Board of Directors meeting. Good evening. Today, we have made the decision to keep the key rate at 16% per annum. In recent months, we have been observing a pause in the deceleration of current inflation and steadily high economic growth rates. Nevertheless, the data available do not allow us to make any unambiguous conclusion about further development of the Russian economy. Our baseline scenario, which is the most probable one, still assumes that overheating of the economy will start decreasing in Q2 2024. However, this scenario that would require an additional key rate increase for disinflation to gain new momentum has become more likely. The choice between these two scenarios will be the key point of our core meeting in July. I would now dwell on the reasons behind our today's decision. Firstly, as regards inflation, the key rate increase in the second half 2023 helped notably slow down price growth. However, in April-May, we received data signaling that disinflation might have paused. Current price growth rates returned to 6% in annualized terms in April and remained elevated in May, high-frequency data show. One of the factors impacting the price dynamics during these 2 months was a one-off indexation of prices for domestic cars and communication services. Nevertheless, the measures of underlying inflation were growing in April as well. Moreover, after the 4 months of decline, household inflation expectations rose again in May. Analysts and financial market participants also raised their forecasts. All these factors are intensifying the risks that the measures of underlying inflation might be declining not as quickly as assumed in the baseline scenario and might get entrenched at the current level or even accelerate. In this case, we would need to additionally raise the key rate. This alternative scenario will remain a subject for discussion in the course of our July meeting when we obtain comprehensive data on price dynamics in May and June and more information about economic and lending activity. Secondly, the economy. We have received very strong data on economic activity in the labor market. Over Q1 2024, GDP was up by 5.4% year-on-year, and the annual growth of nominal wages exceeded 20% in March. These figures might be an evidence of a faster rise in demand. However, we should remember that GDP growth might be slightly overestimated because of the leap year effect. As to wages, the surge might be associated with the payment of large annual bonuses for the financial year that was very successful for many sectors. In other words, although it remains high, the economic activity might actually be somewhat lower than these figures. As before, we consider that the output gap remains significantly positive. Overheating in the economy in Q1 2024 has not decreased at the very least. In the first place, this is evident from elevated price growth rates, especially in unregulated sectors. One of them is tourism, which has the separate subject category dedicated to it in the May issue of our Regional Economy Report. Over the last year, the tourist traffic increased by the record 17%. During the May holidays this year, the southern regions, St. Petersburg and Kaliningrad, welcomed considerably more tourists compared to last year. High demand is promoting the development of the regional economy. However, its increase should be balanced throughout the country and supply should adjust accordingly. This is an essential factor. Otherwise, high demand would translate into price growth. Russian regions need time to expand tourism clusters, specifically to commission new hotel building, find supplies, and especially labor. Growing tightness in the labor market, in particular historically low unemployment, is yet another strong evidence of the substantial overheating in the economy. As the official economic statistics are released with a time lag, we pay special attention to high-frequency data that our regional branches obtain directly from businesses. Some of them note signs of slower growth in demand and economic activity, in particular lower producer prices and a reduction in output in mining, quarrying, metallurgy, and construction. In a number of regions, companies expect demand demand to be more moderate in the next 3 months. This is in line with our baseline scenario, where the economy starts to grow at a more balanced pace already this quarter. Thirdly, monetary conditions have somewhat tightened. The market of federal government bonds has recorded a rather significant rise in yields for all maturities. Growth in interest rates in the money market and yields on federal government bonds for maturities of up to 1 year has been associated with expectations that monetary conditions would remain tight for longer. Increasingly fewer market participants expect the key rate to be cut soon. Another evidence of the tightening of monetary conditions has been soaring real yields in this segment of inflation-linked bonds, amid a moderate increase in break-even inflation. This tightening will be translated into other market rates. Despite this, lending to both businesses and households has continued to surge. More moderate dynamics are only observed in unsubsidized mortgage lending so far. This trend in mortgage lending will be solidifying after the non-target subsidized program is terminated in July. In the baseline scenario, we expect that our earlier monetary policy decisions and a long period of tight monetary conditions will help ensure more balanced growth rates in all lending segments. Households' saving activity remained high. In Q1 2024, the saving ratio hit a 10-year maximum for this period. As before, high deposit rates have encouraged households to deposit funds with banks. Furthermore, competition between the banks for depositors has increased after the limit for fee-free money transfer between individuals' accounts was raised to 30 million. This encouraged the banks to raise deposit rates to retain their clients. For the disinflation trend to solidify in the coming months, households should save a significant share of rising wages and the expansion of lending should decelerate. This assumes that this saving ratio should remain high or even rise somewhat further. Now I would like to speak of external conditions. Overall, our view of global economic prospects has remained largely unchanged and is consistent with a baseline forecast. As global growth rates stay high, the demand for Russian exports will remain stable. The situation with exports and the inflow of foreign currency earnings into the domestic market has been steady in recent months. The OPEC Plus decision to extend the oil production quotas is paving the way for oil price stabilization over a 1-year horizon. The monetary policy pursued makes ruble assets more attractive and ensures more balanced growth rates in imports. However, the import dynamics in recent months might have been affected by the payment problems caused by the sanctions. If the difficulties persist for a long time, limited import quantities might have a pro-inflationary effect in the medium term. I would now dwell on the risks to the forecast. Our baseline scenario assumes that in Q2 2024, growth rates will be more balanced and disinflation will accelerate. However, risks to this scenario have risen. The first risk is that economic growth rates might continue to notably deviate from a balanced growth path. The second risk is that labor shortages will not be easy. So far, there are no signals that the labor market is weakening. The third risk is rising inflation expectations. Finally, geopolitical risks remain quite strong. In such situation, the alternative scenario is becoming more likely. It assumes that the supply of goods and services steadily lags behind demand and inflation begins to speed up again or gets entrenched at the current level for a long time. To be able to give a substantive assessment of the probability of this scenario, we need additional data on lending, economic activity, labor market and inflation that we are to receive by July. Today, we do not have decisive arguments to reject the baseline scenario in favor of the alternative one. Nonetheless, I would like to reiterate that the likelihood of the latter has risen. I would briefly talk of the budget. In May, the government announced the parameters of the tax reform. They provide for an increase on profit tax, the introduction of more progressive scale of personal income tax, and a number of other novel items. To make monetary policy decisions, we need to have a comprehensive insight into the situation, including budget expenditures. As the increase in expenditures will be fully funded from rising revenues, the overall influence on inflation will be neutral. However, there might be secondary effects related to the structure of these expenditures and revenues, and these effects might be both pro-inflationary and disinflationary. Furthermore, with regard to fiscal policy, we will take into account the volume and duration of subsidized lending programs. The larger is the volume of subsidized loans, the higher are interest rates needed for all borrowers to prevent high price growth. This applies not only to mortgages, but to the volume of subsidized loans in general, which are not sensitive to the key rate changes. The larger is the volume of subsidized lending programs, the higher will be the key rate. Winding up, I would like to comment on monetary policy prospects. The Bank of Russia remains determined to return inflation to the target of 4% if persistent inflationary pressure do not ease and inflationary risks materialize. We hold open the prospect of considerably increasing the key rate in July. Monetary conditions will remain tight for as long as needed to bring inflation back to the target. Thank you for your attention. Thank you very much. Dear colleagues, please, your questions. Do not forget to introduce yourselves and identify your agency. Maria. Felicia Maria Bitkogan. In the current environment, as the key rate grows, does its impact on inflation diminishes in terms of its effectiveness? No, we don't believe that the efficiency of its impact is going down. The key rate is an effective impact tool to influence inflation, but we need to bear in mind the circumstances in which the decisions are made. And one of them that I mentioned is large-scale subsidized mortgage program, where we understand that part of it is not sensitive to the key rate movement. So the key rate must move in a stronger way to affect the overall lending dynamics. We need to take this into account. But overall, this efficiency remains. But as I said, we need to account for all of the circumstances within which we make such decisions. Thanks very much. Anastasia in the first row. Anastasia Muhanova from Interfax Agency. I have several questions, if I may. The first one, is there any space left to reduce the key rate in 2024? And hasn't the probability of the monetary policy easing shifted in any way for 2025? Also, you quoted the inflation forecast, I think, from your press release for 2024. Now, can it be explained that the current dynamics doesn't conform to this forecast? And within which range you expect inflation to be within this year? And my very last question, the annual inflation, is it close to the peak, or is it something that is still ahead? And has the Bank of Russia altered its expectation with regard to the start of the deceleration of the annual inflation, because previously it was expected to take place in the third quarter? All right. As far as the further key rate reduction maneuvering space is concerned, I would say that we've got an alternative to that space in terms of raising the key rate. And so to talk about the space to reduce the key rate, it would be possible only after the issue of key rate increases will be off the table. Yes, I mean, as we said it, we expect a much more longer period of higher rates compared to April. But as far as inflation for 2024 is concerned, indeed, there appeared the probability that the annual inflation might exceed the range that we shared with you in our April forecast. In July, we're going to update it. As far as the annual inflation is concerned, we expect that the peak is indeed going to be in Q3 in July, amongst other things. That is because of the utility tariffs indexation, and then we expect the annual inflation to decline throughout the third quarter. Mrs. Zabotkin, would you add something? Yeah, the only thing that I would like to underscore that in Q3 Q3, we expect that the deceleration of the annual inflation will be happening because of the higher values of the end of summer and autumn of last year will be deducted from the baseline, and I mean the high monthly price increases as well as the deceleration of the monthly growth rate within the price growth dynamics this year, because the monetary policy is going to be aimed at ensuring the consistent decrease in terms of the price levels from the levels that they demonstrated over the past 2 quarters. All right. Next question from online. Gena Javshan, Komi Inform Information Agency from the city of Siptivkar. Good evening. Could you please tell us the current rates are at relatively high levels? So with this in mind, how can one explain that? On the one hand, businesses don't find it beneficial to borrow, to develop. On the other hand, the corporate lending continues to grow at quite a high pace. Good evening. Well, if businesses do take loans, it means that they don't believe that not to be beneficial for them, and this can be explained that their price expectations are elevated. And if these price expectations are high, then in the minds of a business, the real rates are being looked upon as more acceptable. And so I believe that businesses do count upon their ability to continue enjoying high profits, because over the past 12 months, good results, the consolidated financial results amounted to almost 34, to be more exact, 33.9 trillion rubles. So this financial result very well enables them to service high-rate borrowings. And yet another factor which impacts high lending rates, I shall repeat it again, quite a substantial share of subsidized programs which are either not sensitive or little sensitive to the key rate changes. The share of such programs in mortgage market is quite big. In the corporate lending, it is smaller, but nevertheless, it is there. And so the larger is this segment, the higher we will have to bring our key rate or keep it at a high level for a longer period of time. I guess that's my answer. Dear colleagues, please. Alisa, yes, in the row before the last one. Alisa Stolerova, TARS Agency, 2 questions. Could you please tell us whether the central bank already calculated the extent to which the profit growth tax might affect the banking industry indicators? And do you also consider that the new housing construction mortgage could be extended further throughout this summer, but maybe on a different basis and on different terms? Yes, preliminarily, we assessed the way the higher profit tax may affect the banks. We feel that, and as far as this tax is concerned, there will be about 200 billion rubles that would go out. I mean, what does it mean? Certainly, it won't affect the financial stability of the banks, not at all, because they have sufficient adequacy remaining, but potentially that may reduce future lending. Why? Because profit is the main source of raising the capitalization of the banks. Effectively, this is like investments, for the manufacturing sector, for the real sector. This is investment into capital, and the capital defines the lending growth rate. Now, as I said it, the banks have quite a good, reserve of capital. It's not even. Some of the banks may not even feel it, while others may see their lending growth potential limited. As far as the new housing construction mortgaging is concerned, I don't think that the non-specific, non-individualized program is going to be extended. No, the discussion currently is taking place about the family mortgage program. Today, President mentioned additional initiatives that are going to further looked into with a very specific granularity. Volume is important to us. If it's just non-specific programs which are going to be substituted with specific addressee, specific recipient programs, which is much better. But in terms of the impact upon our decisions will remain the same. So it is the scale, the volume of such program, which is important. So we're going to monitor the government decisions in that way and see what will happen. I'm going back to the first question, so just to avoid misunderstanding. We're not talking about reducing lending potential. What we're saying is that the lending growth potential is going to be slightly weaker against a higher profit tax. Dear colleagues, Sergei? Sergei Bolotov, Arguments and Facts newspaper. Could you please tell us how the pension indexing to the employed pensioners may impact the key rate dynamics? You also mentioned the new limitation, 30 million rubles, in terms of the wiring through the instant transfer system. But some of the banks are not allowing their customers to wire their money into other banks more than 1 million a day. As far as indexing the pensions to the employed retirees, I don't know. We don't expect any impact. Mr. Zabotkin, maybe will say something. Yes, it is already known that the incomes into all levels of the fiscal system this year are actually getting much greater inflow compared to the 3-year budget dating back to the last year's October, because the economy is developing faster. And so inside the government pension fund, definitely certain additional resources accumulate which can be directed to index the pensions received by the actively employed pensioners. So we don't expect any impact upon the monetary policy to be negative. As far as the execution of the legal norm for the possibility to wire one's own money in one bank into another bank into your account within 30 million rubles threshold. Yes, indeed. Originally, we met with some lack of readiness on the part of some of the players in the market to do that, citing different reasons that technically not ready, although this particular piece of legislation has been debated for quite some time. Clearly, the main reason behind it is not to let your customers go elsewhere, because currently people have a greater comfort without just coming into the cash desk in a bank and, scoop a lot of cash and then try and place it into a different bank's account. It is much easier to do that, and so it is much easier for customers to select a bank which offers better terms. That's the main reason. But nevertheless, we did some work with such banks. They either have already eliminated these restrictions and people can enjoy transferring 30 million rubles, or in a number of cases they're going to make this possible shortly, but we will be appreciative if you tell us about any facts where restrictions like that do remain, because we have different measures of a supervisory nature, because we believe this is a great measure, because it creates a better competitive environment. And we see now that some of the banks have risen their deposit interest rates, and so that's a good thing. Thank you. Next question comes online from Andrei Pushkaryov, Vladivostok newspaper, and he's asking us, if one compares Russia with other countries, today in Russia there is a very high key rate. This level is first of all explained by the need to curb inflation. If at some of a crisis period that is something that may be effective, don't you believe that this particular measure is overly strong? Because currently inflation is growing despite the high key rate level. At the same time, the economy is still suffering from this key rate. Well, hardly likely. Looking at just the figures, one may say that the economy is suffering from unavailability of lending. The economic growth rate, the investment growth rate are at the peak, at the maximum level throughout many years, and the data for the first quarter confirms it, and the very recent data covering April, May also points to that. And I would like to mention one of the indicators of a dynamically growing economy, which is that against a lowering level of unemployment, the number of jobs over the past several months have been demonstrating the growth of about 100,000 to 200,000 workplaces, seasonally adjusted. As far as the current inflation is concerned, last year's inflation in the autumn of last year, let me remind you, was a two-digit inflation, double-digit inflation. If it wasn't for the the key rate being brought up. As a minimum, it would have remained at the same level, but rather, I would say, even would have been accelerating at a high pace, because remember, in November, December, inflation notably went down, and we will do everything in order for it to go down further. I mean, we're not able to say that the 16% key rate currently pulls the economic growth back, but the high inflation related to overheating, if we allow it to take root, it will bring about strongly negative consequences both for the households and for the future economic growth as well. So as far as your comparison of our key rate with the key rates in other countries is concerned, it doesn't make any sense to compare it like apples to apples, because every country has specific circumstances, and many emerging economies sometimes have to really bring their key rate very high if inflation is growing. Even if the developed economy, looking back into the history, the United States in the beginning of 1980s, a few may recall, the key rate sometimes was up at 20%, and that was the only way that helped them beat the high inflation. Thanks, Ivan, in the second row. Ivan Schligin, FOMAG-RU. Some experts in the current situation are saying that the fact of people expecting the high inflation, specifically, pushes everybody to run after loans, while the key rate is still not higher. So expecting it to be at 17, 18 even percent. I mean, the key rate, that really won't change a lot of things around. And so by way of solution, they suggest that the key rate should be brought up to 20% at once, because that would be a significant thing. Now, do you believe these experts are correct in saying it? Yes, quite frequently one hears such concerns. I would say that the growing demand for lending, or when the subsidized mortgage programs are going to be suspended, that's when we hear such views. But we are sending out signals, and the banks do assess the future key rate trajectory, and they may raise it if they believe that the central bank is going to raise it, even if it won't, because that would immediately affect their interest rates and will impact the lending dynamics anyway. Now, does one need to immediately raise the key rate to by a more significant value? That shall depend upon many things. We shall gather data, and we will see if we feel it's necessary, but it will depend upon the inflation, labor market, consumer activity, economic growth. I mean, all of the factors and triggers that we've all the time have been sharing with you. Mr. Zabotkin, well, the only thing I can tell you is that those who are monitoring the Bank of Russia's monetary policy for quite some time in our history may definitely identify different scale of key rate changes, because it all be conditioned by the sort of the current environment, by the forecast, and the level of the interest rates in the economy generally. We believe to be conducive to either our ability to bring the inflation to its target. Thank you very much. Rita, over there, please. Margarita Mordovina, RBK. I will have 2.5 questions, if I may. The first, a quick one. What were the options that you considered during the board meeting? Somehow nobody has yet asked this question. And bigger 2 questions. Has the Bank of Russia assessed the way they announced tax reform in 2025? Will the tax reform bring greater income into the fiscal system, and consequently how that might impact inflation and the economic growth next year? And my second question is about the payments for imports. To some extent, you already referred to that. There was a hypothesis mentioned. The worse we're off in terms of paying for imports, the better ruble is faring. Now, have you assessed its impact upon exchange rate? And this as a factor, does it impact the current ruble appreciation that we're currently seeing? And generally, how do you see in the future a situation with our ability to pay for imports? Will everything recover, or still certain difficulties shall sustain? Now, the options that we reviewed were to keep the rate as it was and bringing it higher. And actually, some proposals were heard towards 17 to 18 percentage points. I should mention that last time, as I said, there were also an option to keep the rate as it was, but this time the number of views that we should start thinking about bringing it up were more numerous. Now, as far as our assessment of the tax novels, we are considering taxes only together with expenditures, because if you consider taxes separately, they are always disinflationary. If the government simply raises taxes, reduces fiscal deficit, that reduces the contribution of the government sector into the economy and decelerates inflation. In our case, taxes are being raised simultaneously, so I would say that the overall effect is going to be neutral. With regard to imports and the impact upon the exchange rate, very truly, we see a penalty that is related to the payments, a certain stabilization and a certain reduction of imports. But alongside with the other factors, that was one of the reasons behind ruble appreciation. But there have been other factors at play as well, because a big amount of hard currency sold by exporters with a bit of a lag from high prices, which was March this year. That was also one of the drivers. Now, we will see what will happen further based on the situation. So principally speaking, if the situation normalizes, this effect will be a gradual one, as our analysts believe, so it might be spread out in time. But generally, this problem with payments and these restrictions may lead to higher transactional costs with regard to imports, possibly to some prices going for import items, and may also generate a certain pro-inflationary effect. Mr. Zabotkin, please. Yeah, very briefly, I would like to draw attention to the fact that during the past 30, 45 days, very significant change upwards took place in as far as the interest rates were concerned. We've already spoken about the deposits, but that really goes for the whole of the interest rate curve in the financial markets as well. Then 100, 150 to 180 basis points change against the key rate remaining unchanged at the same time. So this is because of the expectations for the future trajectory, which naturally additionally raises the level of attraction that ruble imparts, and that also may significantly positively impact the exchange rate. Thank you. Next question comes online from Elena Bondarenko. Molot, the original newspaper from Rostov-on-Don. Good evening. The May calls and the freezing in some of the southern regions will negatively impact the crop yield. Now, do you believe that that may affect the price growth and generally, as well as negatively impact inflationary processes? Thank you. Thank you for the question. Yes, the weather conditions in spring turned out to be not very favorable towards our farming industry in the south regions. The weather was drier than usual. In the central Russia in end of May, June, hail, cold weather, which is negative for the crops. We know that Russia is one of the leading grain producers, and so the reduction of forecasts for the yield brought about higher domestic and global prices. But we have a floating grain export duty, and that is why the fluctuations over in the external world are less felt on the domestic prices. The second factor was that despite this softer forecast, still its level stays within the range of average prices of the past 5 years, which means that the crop yield is still going to be significant. Now, in terms of its impact upon inflation, in the past, we would assess the crop yield factor as disinflationary. Now we believe it is slightly pro-inflationary. Now, apart from the grain category, there are also fruit and vegetable farming in the central Russia. We expect the negative effect there not to be very strong because it doesn't really affect the southern regions, which also produce quite a lot of fruit and vegetables. And so, if necessary, the government is saying the imports will substitute whatever losses the domestic producers may have. So we don't expect any strong influence upon pricing. Thank you, colleagues. Artyom, please. Good evening. Gorodov Artyom, Invest Future. My question is about the commercial bank's activities, what they were doing a week before the decision made by the central bank, because we see that the commercial bank started raising their commercial deposit rates. Can one describe this particular situation, growing rates without the growing rates? And what does Bank of Russia think about such behavior on the part of the commercial banks? Alexei Borisovich is telling me that we think well about it. Well, indeed, the bank started raising interest rates, and I guess two reasons behind it. The first, including, in their interest rate decision, the understanding that the monetary conditions are going to remain tough and tight longer. Because before that, banks used to say, let's wait this Q rate as it is right now, because it will definitely start climbing later on. But there was a different factor at play, which is not about monetary policy facts, as I used to say. That is specifically the law on fee-free 30 million transfer in between individual accounts in different banks. And so the banks are trying to retain their customers by raising the interest rates. So they're trying not to really be different from the rest of the competition. But overall, this is an important point. The way the deposit rates evolve, because they reflect not only the current level of the key rate, but rather the expectation of what kind of rate there will be in the future. And if we talk about 3 months deposit, the current deposits, the banks, when they decide on the interest rates on them, they include into it their understanding of what kind of key rate there will be within the next 3 months. If it's a 6 months deposit, then it should cover 6 months in their assessment. And so before April, the banks were expecting the key rate to go down now over the past few months, not only because of our signals and messages, but the data that they started receiving the way we do about that the price growth is slowing down, that the lending activity is up, that the labor market remains quite tight. Practically everything that we've mentioned in our press release. So that has altered their expectations. That the central bank may, bring the Q rate up and will keep it for a long period of time. So our communications, our messaging, and the explanation of our rationale is important, because the banks reorganize themselves in terms of their interest rate in response to the data coming, when they understand what will be the response of the central bank. But your question is quite appropriate. You see, whereas in July, data shows that the rates should be brought up. The banks have done it in advance. Now, will it enable us not to bring the key rate up? Well, that will depend upon the level of interest rates the bank shall deem necessary in order to bring inflation back to 4%. And if, out of our forecast, out of the updated forecast which takes place during the core board meetings, we make a decision not to raise the key rate, and we signal that we are not intending to do that, the banks should reduce their interest rates. We should take that into account. We must understand that the banks are not going to keep their interest rate as high, and we will organize ourselves around it with respect to our forecast, respectively. So there are situations when the view of the central banks and what the market thinks differs. That's only that is not only something that happens in our case, in other countries it happens as well, but that will bring about additional adjustment amongst the market-based rates. Well, summarizing, I can tell you that our decision about monetary policy and the key rate are dictated by the level of the interest rate that is necessary in order to achieve the inflation target, while the bank interest rates, the inflationary things, can only prophesy these future things and adjust accordingly. Thanks very much. Elena, in the last row, please. Elena Fabricna, Reuters. You said, you mentioned a considerable key rate increase. What do you mean? Is it 18% that was reviewed during today's meeting, or can it be 20% like the case was in 2022? And my other question, in case you receive any menacing data, would you be, deciding to increase the rate without waiting for the July core board meeting, but make it in an extraordinary way? I mean, the significant. It means raising the key rate above just 1 percentage point step upwards. Now, if there ain't going to be any shocks, I mean, not the kind of pro-inflationary risks and trends that we're talking about, we see them, and once again I shall say, we believe that the probability of an alternative scenario that might require the key rate to be brought up, that this probability has strengthened. So if it indeed manifests itself and becomes true, and we end up being in an alternative scenario, then in July we will raise the key rate. Now, if there are some extraordinary shocks that take place, we can always convene for an extraordinary meeting, but even an alternative scenario doesn't presuppose that. Colleagues, please. Yes, please, Svietla. Svetlana Orlik, RIA Novosti. Could you please tell us, you mentioned that the Bank of Russia identifies risks of a considerable deviation from the GDP growth rate from the balanced rates. Due to that, do you envisage the possibility of GDP growth being high in your July forecast? Or maybe you would also increase your lending, household lending and business lending forecast? Thank you. We shall be very closely monitoring the data at the July core board meeting and review our GDP expectations as well as the lending rates. But, well, based on the current preliminary assessment, the GDP is currently staying at the upper threshold, but we will take a look at it. Well, first of all, when we're saying that the forecast is always updated at every core meeting overall, I mean, it doesn't make any sense to say that one indicator will be updated or the other indicator will be updated, because forecast is a comprehensive scholastic thing. And so the whole basket of it is being updated simply because all of its components are affecting each other. And so, and as far as the GDP information is concerned, as Mrs. Nabiullina mentioned, the data covering the first quarter definitely have been shifted upwards because of the February 29th effect, because February 29th was an additional day that the economy lives through, and consequently the level of output and the level of demand additionally adds to that, and that actually this way we compare the leap year to the respective quarter in the previous year. Now, what is going to be the contribution from this effect? One would only be able to judge throughout the subsequent months, but it is going to be significant. Simply just taking the data for the first quarter and, rest assured that in your statement that the current year's economic development following a high trajectory is not appropriate. But towards the end of July, we'll have sufficient information. We will have April and May, and the current June statistics will be accumulated, so as to come up with a more precise assessment as to where the point of economic activity is going to be throughout the Q2 this year. Thank you. The next question comes online from Anna Gromova, Anna Finance, please. Good evening. Currently, there is a unique situation because, on the one hand, we know that people have started saving more, but simultaneously they're spending more. Whereas in the past, we used to say that people go and take loans when they're short of money. Currently, those people who take loans who have more money, and so they take more loans in order to afford some expensive and more expensive purchases that they couldn't afford to do before. So it means that it creates a stronger negative impact upon inflation. So my question is, won't it happen in such a way that for a long period of time, for many years, we will live with double-digit everything, like the key rate and everything which characterizes the financial system and the interest rates? I mean, my second question is also about the same thing, but about impacting inflation. So how things are going with preparing the draft legislation which would enable the banks from the friendly countries to set up operations in Russia so that imports could run easier, payments easier, and that would so that to make sure that it decelerates inflation as well. Well, all right, thank you very much. I will first respond to your second question. This kind of work is ongoing. We have come up with this kind of an initiative in order to permit foreign banks to open their operations in Russia. Currently, this document is going through the interagency clearing, and hopefully it will be submitted to the government soon. Back to your first question, I will ask Mr. Zabotkin to comment. Thanks very much for your question. The lending rate growth is slowing down. It is not so visible in the annual data because, I mean, the annual changes in terms of the annual corporate lending, household lending, they're lower than what they used to be 6 months ago. In terms of monthly growth and seasonal adjustments, the first half of this year is notably lower than what took place in the middle of last year and in the autumn. So to say that lending doesn't correlate in any way with the tightening of monetary conditions, I guess this is not very fair, to put it that way. But now, why consumer lending remains strong? Yes, an important effect there comes from an accelerated income growth, I shall say, as well as the changing level of income amongst a very broad group of households, some of which in the past didn't have any access to lending, and now they can have even mortgage lending. It's significant, but this is a one-off effect simply because the level of their incomes have considerably changed. But the sustainable demand for household lending directly depends upon the correlation between the level of interest rates and the inflationary expectations. Inflationary expectations remain high. They're not as high as they used to be during the spring of 2022, but they're much higher than what we recall in 2017, 18, 19, when inflation was at 4% level. Now, as inflation goes back to 4% level, inflationary expectations would similarly be dwindling, and that respectively will bring down the assessment, the perception of the interest rates that households have, and respectively would transform into a more restrained lending activity, even against the low interest rates. But all of that would be spread out in time, and it's not just about several months, several quarters. That's what it is. Thanks very much, dear colleagues. Natalia. Moscow Komsomolets, Natalia Truzhina, Economics Department. As of July 1st, the subsidized mortgage program is coming to its end. The Bank of Russia many times used to say that it supports this government decision, but at the same time, as they say, the construction sector is the locomotive for the economy, and some of the surveys are saying that in many sectors related to the construction, almost every 10th Russian citizen is employed there. Now, could you please tell me whether the Bank of Russia did its estimates the way the suspension of the subsidized mortgaging will affect the household's debt burden and the economic activity? Is it going to be controlled? Won't it transform into the housing crisis that, like many experts are saying, won't it bring more insolvencies in between the businesses and the people who are employed by such businesses which might suffer because of it? Well, So many scarecrows are being drawn up, I suppose, in order for this mass subsidized mortgage programs to continue being, which quite often are transforming not to a better availability and accessibility of housing, but in better profit-making for the construction industry. We expect that the mortgage sector will continue growing, but not at the 30% plus level, but in a more balanced way, based on the estimate we had in April that would be about 7 to 12% this year. I mean, this is a rate growth which is sufficiently strong, but this growth rate won't lead to the kind of distortions that would negatively impact the households, because on more than one occasion we spoke about the price distortions in the primary and secondary housing markets when someone would go and take a mortgage loan looking at the low interest rates. But eventually the household will have to overpay for the ultimate value of a housing. And so the difference between the primary and the secondary housing value is so big. When they want to resell, they will have to resell at a very large discount. So, of course, I mean, and the market-based mortgage, I mean, for those who don't fall into the specific mortgage offering, you see. So as far as the impact upon the construction industry is concerned, we believe that the market will continue growing. There's not going to be any hiccup for that market. It will continue going strong. But like I said, very sizable profits have been accumulated. The safety cushions have been prepared. And clearly, people are employed in this industry, in the adjacent industries and correlating industries, so we don't expect that there would be mass laying offs. And, currently the situation in the labor market, everybody is chasing just after people. So the scarecrows that are being drawn, they're just simply scarecrows, nothing more than that. Thank you. The next question online from Daniel Botvinsky. Transbaikalia TV channel from the city of Chita. The target that the central bank has set in terms of inflation is correlating to the annual inflation, which reflects the price growth during the previous year. So ever more frequently in the publications and the central bank speakers underscore the current price growth rate, which reflect more current trends. Now, does the Bank of Russia believe it is possible to change the indicator which is being used to define the target? No, we don't believe it is necessary to change the target. There is no contradiction or there's no discrepancy between the inflation target, which we measure as an annual one, and the accent we put upon the current price dynamics whenever we make a decision about the key rate. Why? Because the annual inflation is the kind of inflation which occurred over the previous 12 months. It is facing backwards. Now, if we talk about the annual inflation in May 2023, this is the average price growth covering 12 months, practically since May last year. It is important for us to understand, we sometimes call it the inflationary pressure, I mean the current price growth rate. So we take either a monthly or 3-monthly price growth rate. We adjust it by season, recalculate it by 12 months. I mean, if it's a monthly one, then we multiply it by 12. If it's a 3-monthly one, we multiply it by 4, respectively. And so we take a look at what the annual inflation might be if prices continue growing at the pace that was within this month or within these 3 months. And so we assess, we evaluate this way the current inflationary pressure, which is that the current inflation, it describes the current economic picture, but the outcome must be assessed based on the actual inflation within a longer period of time. I mean, in terms of what the next year's inflation is going to be. If it on average is 4.5%, it means that it's close to target. So we believe that the target should not be changed. I mean, the target, inflation target, should not be changed. But indeed, when making a decision, we are paying stronger attention to the current inflation, the current price growth rate. it is important to also understand if we support the current price growth rate at close to 4% throughout 12 months, then towards the end of 12 months, the annual inflation is going to be 4%. That is the important consideration. I mean, this is the same thing. It's just that the measuring of the current price growth rate enables us to assess what is happening in the economics right now, while the annual inflation is telling us what happened in the economy over the past 12 months. Thank you. Dear colleagues, Mikhail, please, the third row. Mikhail Moseev, Frank Media. Going back to the consumer lending, yesterday you were saying that the Bank of Russia so far hasn't been able to really cool this market down because of the growth of incomes. Do you see it as possible to resort your tactics, maybe to achieve this outcome in a different way? Maybe there are some certain measures that the Bank of Russia still has available to it. And my second question, if the central bank is not able to cushion the inflationary impulse and the current model of the GDP growth exhausts itself, are there any risks of stagflation and how strong they are? As far as consumer lending is concerned, indeed, it is growing at the rates which are higher than what we've expected, because we thought that there will be considerable slowdown of this space. But as Mr. Zabotkin told us, if you compare it to what there was at the peak of the current inflation and the current price growth rate, towards the last year, this pace was much higher. So it means that the key rate is an effective tool, and it will be continued to be used. If we need to adjust the level of the key rate in order to achieve 4% inflation by getting hold of a more balanced lending growth rate, we will be ready to do that. As far as the risks are concerned, Mr. Zabotkin, please, could you explain? In a hypothetical scenario, I mean, the central bank is not bringing inflation back to the low level, is not taking adequate decisions. Naturally, stagflation shall ensue, like the case was in many countries who wouldn't cushion the inflationary impulse on a timely basis. So that is why we're making the necessary decisions with respect to the key rate in order to make sure that the lending activity and the aggregate demand are developing in such a way which would be compliant with the potentials in the economy and would end up in the balanced growth and low inflation. Yes, dear colleagues, please. Next one, Alexander. Hello, Russia TV channel. The news program, not very much on the subject. On May 21st, the EU Council officially approved to use the net profit from the frozen Russian assets. Will there be any reciprocal measures from Russia? If positive, then what kind of measures? And are we planning to return this assets sometime in the future? The reciprocal measures are being reviewed by the leadership of the country. Thank you. Natalia, please. Hello, Natalia Zarudskaya, Vedomosti. So what is the way that the Bank of Russia is looking at the fact that some of the Russian banks who belong to the foreign groups are reducing their lending, but not because of the central bank measure, but because of the demands imposed upon them by foreign regulators? Today you also mentioned that there were a stronger view towards keeping the rate between the board members. So I would like to understand how the votes distributed. Well, as far as your second question is concerned, we are not disclosing the information about who voted how and who thought what. I mean, the decision was the result of a broad consensus, because we discussed arguments in favor both of the first option and the second option. So the ultimate decision was to keep the rate as it was. Now, as far as the Russian banks with foreign capital are concerned, I can simply just tell you that indeed they are under a huge pressure. The Russian regulators, in as far as any measures are concerned, which would otherwise limit the activities of such Russian banks, are not taking. Thank you. The next question online from Victoria Shirgina, Law and Finance. Hello, yes, thank you very much for the opportunity to ask you a question. This expected decision about the key rate, I believe, has been the most dramatic recently. And so it seems, that a year ago the central bank decided not to raise the key rate. It was really taking a closer look at the dynamics. Now, won't it lead to a situation that in the future you would have to raise the key rate much more dramatically and much more quicker? What do you think about it? Let me go back to the logic of what we were doing. We reviewed two scenarios. Indeed, there is a bit of an uncertainty in terms of what specific scenario we're currently living through, because there are arguments in favor of us being in a basic scenario where disinflation is going to revive. There are also such factors as tightening of the monetary conditions, which is still expected to translate itself into the market. Then the end of the broad subsidized programs and others. Let me not run the list, but there's also a probability of a scenario where the data will show that we are already in the kind of scenario where inflation has already pegged itself at this relatively high level or growing, and then we will be making a decision about different key rate, and the step of that key rate will depend upon the data we receive. But throughout June and July, before the end of July, when we will have the next core board meetings, we will get quite a substantial data that will give us good food for thought in order to make this or that decision. Just additional little comment towards what the governor said in the end, because the interval between this meeting and the next one is longer, and so the amount of data that is going to be gathered, this is not going to be covering just 1 month but 2 months, and so on July 26, the very same set of factors we will be able to evaluate in a much more precise way than today. So consequently, we are looking forward to July 26 already. Dear colleagues, are there any more questions? All right, Daria, in the last row. Daria Novikova, the banking review. What are the measures that the Bank of Russia is planning to undertake to saturate the market of the digital financial assets with liquidity? Well, the digital financial asset market is quite young, but is demonstrating active development. It is true that our core liquidity is concentrated in the amongst the brokers in the exchanges, where this particular segment, the digital financial assets, is practically isolated. Moreover, inside this particular market segment, which is digital financial assets, it is also fragmented within itself. You can issue a digital financial asset off one of the platforms. We've got 11 of them, but it's not going to be marketed or sold by others. And so it's an issue. And so what is necessary for this liquidity to be flowing in between different market segments and inside the digital financial asset segment of the market. So we feel that the digital financial asset one should be able to buy through just one window, irrespective of a particular platform that issued this asset. We've got already 2 independent exchange operators, the Moscow and St. Petersburg exchanges, and they will be able to develop a respective integration with the platforms and the information system operators. So far they haven't achieved it, but this is the kind of a market decision that we believe is going to be reached. Apart from it, we are debating with the market players such a thing so that the brokers, customers, and the clients of the fiduciary managers and other traditional market players, for those who are clients to these traditional players, could buy digital financial assets directly by using mobile apps that they find habitual. Well, certainly, I guess the draft law would be necessary for that, and we are looking into that. We also want a system to be there, a possibility, a capacity to delegate customer ID identification to the professional market players, brokers, and independent exchange operators. So this draft law is already in the Russian parliament, and hopefully that is going to be passed soon, which, in as far as this problem is concerned, is saying whether saturating the market with liquidity, we hope that that would find a proper solution to that. Well, thanks very much. We've got one more question online from Olga Gogoladze, Pro Finance Project. Olga, please. Hello. The questions about the Russian stock market. Vladimir Putin announced the plans to double the capitalization of the Russian stock market by 2030. The central bank described it as difficult but feasible. Now the question, through what? To which extent? What I believe will help the stock market capitalization to grow? Increasing the number of IPOs or increasing the circulation, the trading activity? Which of the factors might give a better result towards 2030? And what is the role that the central bank might play in it? I think that we're going to act together with the government at all fronts towards all directions, because there is no one specific tool that would improve the market capitalization. This is a stimuli and measures that can be applied both to the issues, to investors, and developing the instruments to make them comfortable. Now, the current economic growth is above what we had during the previous years. More profits, a greater capacity to pay dividends, and that attracts investors which are capable of pushing the stock prices upwards. But I guess it is also important, very important, to bring in new issues, because whatever we are seeing now, the number of IPOs has grown, but you cannot describe it as anything booming, because, first of all, they are smaller ones in terms of the scale. They cannot be compared to the kind of IPOs that we used to have in the past, and not always the amount of stock which is released into the circulation is sizable. We have major companies, leaders in their industries, which are not going into capital markets. So one of the incentives, a good active incentive, is a fine-tuning of the government support measures, because current measures are quite effective. We already spoken about our attitude towards the subsidized programs, which are supposed to go down, but they are still there. But if they are there, they shouldn't incentivize companies to nearly run head over heels to get the loans. Subsidized lending guarantees from the development institutions. I believe, first and foremost, we need to incentivize the issues if the government wants to help them to go to the capital market. These could be certain tax benefits, as an investment deduction which is offered to companies which invest out of their own profit. If they invest from external sources, why not? But it needs to be additionally taken a look at. And similarly of a grant funding, if the company raised it, not just broadening the subsidized programs, but transforming them in such a way so that the companies find it beneficial to go out into the capital market and raise money there. Well, in terms of the stimuli to investors, currently what we're talking about is that investors do have quite a big demand, quite an oversubscription in terms of the IPO books. There is a greater number of issues. It is important to be able to bring investors in greater numbers, and maybe the core measures may not be in the financial realm, but rather the predictability of the dividend policy, transparency of information and data and reporting. We understand that some of the information is sensitive and it is not readily available, but investors need to get the kind of information which enables them to make up their mind in terms of where they should buy shares, whether they should sell them right now, and protecting the right of the minority shareholders and investors who buy securities through an organized auction. Thank you, dear colleagues. Is there anybody else who hasn't had time to ask? Julia, that was going to be the last question, please. Tikhonova, Julia. Please tell us, it is expected that the end of the mass subsidized mortgage would improve the availability of the market-based mortgage. How it is going to be achieved? Through what? In my other question, what is the position of the central bank towards extending or cutting off or stopping this kind of a mortgage, or raising the interest rates for the Far Eastern mortgage? Well, we believe that if the scale of the subsidized mortgage is limited, and we achieve the 4% inflation target, then the value of the market-based mortgage is going to go down. If the subsidized mortgage remains high, then the market-based rates are going to be remaining high. Let me remind you of what happened when inflation was close to 4%. I mean, for a long period of time, relative to our country, for it was 5 years, mortgage activity started growing without subsidization, and the rates were at about 8% without the fiscal system allocating enormous amount of money for subsidization, which means a price stability within a certain specific period of time and no distortions in the market because of such programs. So that will happen. But as we said, inflation target after 2025, taking into account that the subsidized programs are going to be limited. Now, as far as IT mortgage and the Far Eastern mortgage programs are concerned, principally speaking, this is for the government to decide in terms of the amount of more subsidized programs to which specific purpose is to be applied. Family IT, Far East. For our decision, what's important is the scale of such programs. Even speaking about the Far Eastern program, its scale in terms of the whole country is not very significant, no strong impact. And also, I believe that the government should also watch out for it so that there wouldn't be any distortion in the housing market, because what we see that the regions which are participating in this program, the gap between the primary market prices and the secondary market prices is bigger for those who are not involved. So these disbalances in the regional market is what will be the cause of suffering, for those who would be trying to apply to the subsidized program. Dear colleagues, thank you very much for your patience and interesting questions.